Welcome to the Growth Cap podcast, where we chat with CEOs, investors, and other key industry leaders to uncover insights and strategies for accelerating growth and succeeding in business. I'm your host, RJ Lumba, Managing Partner of Growth Cap. In this episode, we chat with Richard Stockton, CEO and President of Braemar Hotels and Resorts, a publicly traded REIT that invests primarily in full-service luxury hotels and resorts, including the Park Hyatt Beaver Creek and Ritz-Carlton St. Thomas, among many other well-known properties. We discuss what Richard looks for in a good investment, as well as his outlook for what lies ahead. We hope you enjoy the show. So Richard, thank you so much for joining us today. Delighted to chat with you. As mentioned, we like to have on as guests leaders of businesses that we're big fans of. And what sparked this is that, my family and I have gone to your Beaver Creek property and have really enjoyed our stays there. We're big fans of the property. And so I thought it would be great to chat with you. So again, appreciate you taking the time here. Maybe what we could do to kick off is just a little bit of background. I know you joined the company a few years ago as CEO. Maybe if you could share with our audience a little bit of your background.
Sure. First, RJ, thanks for having me on today. Delighted to speak with you. Braemar is a company that's focused on luxury hotel investment. And that's really been my passion for many years. From when I started as a kind of a young lad working in a restaurant, I got very interested in the hospitality business. And starting as really a dishwasher to make some extra money in high school, I developed a passion for cooking and became a cook in a restaurant, which ultimately led me to the Cornell Hotel School. While at Cornell, I then found an interest in numbers and finance and real estate development. So while I had some initial experience in management, I pivoted very quickly to the more financially analytical side of the business, and then continued to develop that through career experiences at Price Waterhouse and Morgan Stanley. I did follow up with an MBA to study more about real estate and finance. And having the opportunity to join Braemar Hotels 2 years ago was really the capstone, to that career progression. And it was an opportunity to focus on purely hotels, whereas I had worked a bit with hotels, but with all other types of real estate previously in my career, and apply what I had learned along the way. And in a role that allowed me to really impact the strategic vision of the company and take it into a direction that I felt would benefit shareholders. So I started 2 years ago. It was a little over 2 years ago, I guess now. And within 3 months, it rolled out a refined strategy for the company. The company was spun off from another company a couple of years prior, but hadn't really found its way in terms of strategy. It was maybe a little bit too small for the sector. It had a strategy that was, I would say, at that time overlapping with some other companies, but in a smaller format. And I really wanted to differentiate the company from its peers. And the way to do that was ultimately to define a strategy around investing in the luxury hotel and resort segment. There was a little bit of a void amongst lodging REITs at that time, and the lodging REIT sector is about 20 REITs focused on owning hotels, but there was none that was purely focused on luxury. And upon looking at the portfolio, I concluded that there could be some changes that I could implement over the period of a couple of years to make a strong push into that segment. And based on the research I had done, the luxury hotel segment had proven itself to be the fastest growing hotel segment of all the chain scales. So the luxury segment has grown 4% per year in terms of RevPAR growth for the last 30 years. That's about as far back as we have data, versus the other segments, upper upscale, mid-scale, et cetera, which on average are going to about 3%. So it was an opportunity to move into this higher growth segment with a defined strategy, which would differentiate us and give investors really a reason to own the company. And in order to do that, I just had to make a few changes to the portfolio, which I've since implemented over the last couple of years.
Mm-hmm. And was the and forgive me, I'm not sure if I have my timing correct, but was the Beaver Creek property in the portfolio at the time, or was that a new acquisition?
That was a new acquisition. So very quickly, beginning in 2017, we were able to identify two new acquisitions. Was the Park Hyatt Beaver Creek, which we closed on in March of 2017, and the Hotel Yountville, which is a hotel that we own in Napa Valley in Yountville, down the street from another one of our properties, which is called the Bardessono. Yountville is the culinary capital of Napa Valley, so it's home to a number of Michelin-starred restaurants, and as a result, it's a very high-rate market. So those were the first two acquisitions. We also, at the time of the strategy refinement, identified 4 hotels that would be deemed non-core, and undertook an analysis to determine if we should sell them or somehow reposition them. Where we came out was that we would ultimately sell 2 and reposition 2 to be upgraded and upbranded. Subsequent to that, we acquired 2 other luxury hotels, and this is now within the past year. We bought the Ritz-Carlton in Sarasota, which includes a beach club on Lido Key as well as a Tom Fazio golf course. And we also acquired the Ritz-Carlton Lake Tahoe, which is a mid-mountain at North Star Resort, and it's the only luxury hotel in the Lake Tahoe market.
Mm-hmm. Those are both great properties, and congrats on those recent deals. And so, I guess as you're evaluating, and looking at your portfolio, which is, spread across the U.S., it looks like you have kind of a really refined method of picking, the assets you're going to pursue. Is this like most, I guess, investors? There's a fair amount of valuation of the numbers that make the investment work. But what are some of the other characteristics that you look for when identifying a target?
Yeah, so we have a systematic way of evaluating target markets where we start, right? And that determines where should we be spending our time and resource in attempting to uncover opportunities. Some of them we're able to generate through off-market discussions with other owners, and some of them come through the broker network, which we spend a lot of time cultivating. And as we look at a market, we look first at the depth of that market. Does it have enough luxury hotel rooms for us to be interested? But then we also look at the fundamentals. So what is the outlook for supply and demand, which translates into RevPAR growth? What is the outlook for employment generally? Is this a market that is union or non-union, which we'll have to factor into our margins ultimately? And then lastly, it's what is the prevailing pricing that's available in that market? Do sellers have what we would consider reasonable expectations? And you'll tend to find that some markets, by virtue of their long-term characteristics, and I'm thinking here of maybe something like a New York or even Miami, it's difficult to acquire because pricing expectations are so high. So you mentioned numbers of course, drive the ultimate decision. And we're pretty disciplined, I'd say, about really 2 things. One is when we acquire a property, we want to acquire a track record of generating income. There's got to be income in place that generates an attractive initial yield. And the last 4 luxury hotel acquisitions we've made had at least a 6% unlevered initial yield, which gives us comfort that this is an acquisition that will immediately start contributing to our cash flow that we use to pay our dividend. But then secondly, we look at the longer term prospects of an investment. And again, the last 4 acquisitions have had a minimum of a 10% unlevered IRR. And that's based on not only what we think the market will do, but what we think we can bring to the property in terms of asset management initiatives of kind of managing the manager and half of our properties are managed by Marriott. So we have a fantastic relationship with them and work closely with them on margin enhancement, but also what other asset management value-added initiatives we can bring to the table, whether it's figuring out where we can maybe add some guest rooms, where we can expand some meeting space, where we can bring in a new restaurant concept, a new bar, et cetera. And we'll spend a lot of time prior to acquisition thinking about that too. So that's a little bit of the formula. And in terms of strategic criteria, this is perhaps implied, but it's got to be a luxury hotel, and there's a defined set of brands that fit that description. Of course, many independent hotels also fit that description. And it's got to have a suitably high RevPAR that allows us to maintain that position that we currently occupy of having the highest quality hotel portfolio in the publicly traded sector. And so our RevPAR today is over $220. So generally the acquisitions that we're looking at will have a $200 or more RevPAR. So it would, at a minimum, not dilute our RevPAR, but in many cases we're looking to accrete it and create even more distance between us and everybody else in terms of portfolio quality.
Mm-hmm. And how's the St. Thomas property coming along? I believe you're under renovation there and slated to reopen later this year. How's that process been? And what can you share about that?
Sure.
Given that you kind of took a little bit of a hit from the storm.
That's right. In the fall of 2017, Hurricane Irma swept through the Virgin Islands and very tragically impacted St. Thomas considerably. And we were at that point viewed as really a safe haven. We kept the hotel open to enable people from the local community to find shelter. And when the storm cleared and the clouds broke, we found that there was significant damage to the hotel, including many parts of the roof structure coming up and allowing water to leak in. That resulted in almost a complete loss in terms of hotel guest rooms from water damage and mold. Over the past, 2 years now, maybe it's more like a little over a year, we've been engaged in rehabilitating the property. The roof is complete. Many of the guest rooms have already been redesigned and rebuilt. We're introducing new restaurants, and we're taking the opportunity to add additional amenities. We're adding another family pool with a slide and a grotto and dancing fountains and this sort of thing. And I think we're going to emerge from the renovation in October of this year with a dramatically improved hotel product that should maintain, I'd say, its position as the nicest hotel in the Virgin Islands. And we've had a fantastic experience with our insurance carriers. I think one of the things that people misunderstand about the insurance process is they only hear really, about the bad news stories, and they therefore assume that when something like this happens and you start to work with an insurance carrier, you end up in litigation. That's not been our experience at all. We've worked very collaboratively with our carriers. We had business interruption recovery proceeds coming in 30 days after the event, which is dramatically short in time, but was important to us because we are a public company. We do have to report quarterly earnings, and we didn't want investors to really worry about that income stream. And so we work very effectively with our insurance carriers. That great work continues today, and they're providing us with the direct loss recovery as well as business interruption through the process. So we'll emerge with a fully renovated hotel reopened without having experienced the downtime that you would normally experience from a renovation. So from a financial perspective for investors, it's going to be great. From a guest perspective, they'll probably miss one vacation while the renovation is ongoing, but then they'll be back online in time for the holidays this year. And we hope that they'll be coming in droves because it's going to really be a great guest experience.
That's fantastic. And you mentioned that when the storm was occurring, you kept the property open to help out local residents. We noticed on your website that your company supports a lot of charities. Is that something that's important to you and the team?
Absolutely. Our philanthropy program is both deep and broad. We provide hundreds of thousands of dollars to various charities over the course of the year, many of which are focused on education and focused on children, in some cases disabled children. We support organizations such as the YMCA. We also support educational systems of higher learning. So we contribute to many college programs as well. So that's something that is ingrained in our culture, something I believe that our shareholders and other stakeholders support. And in addition to the financial contribution, we do have a program that's mandatory for our employees to participate and dedicate between 6 and 8 hours a year to various charitable organizations. So we will run programs with the Salvation Army around the holiday time to package up and distribute gifts for underprivileged families. We have a program with Habitat for Humanity to help build homes in the community. And so it's these types of things that we think are important and allow our associates to give back and hopefully drive it to be a better place for everybody. And that's important to us.
And you mentioned earlier, I guess working in reverse order here, but at the beginning of the interview, you mentioned that your interest in hospitality really started at an early age, and therefore you decided to go to Cornell. Both my wife and I went there for business school, and the hospitality program is thought of course, very, very highly. Actually took our kids up there this past summer to visit and stayed at the Statler and just to show them a bit around the university. But we'd love to, this is more on a personal front, but we'd love to hear about how the school kind of helped you and kind of, what was good about kind of the hotel program. I've known a lot of very accomplished people to graduate from that program. Yeah, no,
I can't say enough great things about Cornell. You were there. You got to experience it as well. My experience as an undergraduate was, I think, especially impactful because, the Cornell campus and Cornell community is very kind of insular, but it's insular, I think, in a good way. It's isolated from the distractions that you might find if you're at a university that's based in a city, say. And I think having that inward focus really allows you to not only concentrate on your academics, but think about what you want to do with your life and how you want to get there. I locked on to the hotel industry probably a little bit earlier than most as my goal. I didn't know exactly how I would apply it. I thought initially maybe I would go the way of management and become general manager at a hotel, and I did have an interest in resort properties at the time. But then as I learned and I think grew as a person, I realized that maybe that wasn't the right thing for me, and instead I wanted to be much more into the finance and analytical side of things. So many of the people that go to the hotel school will focus on different silos, if you will. There's management, there's marketing, there's food and beverage, there's information technology, there's real estate, there's finance, there's accounting. So I chose real estate and finance, and that became my passion. And so all of my extracurriculars and things were focused on that. I did internships that focused on hotel valuation, and then ultimately went to work for an accounting firm in real estate consulting. And so then I was able to broaden out that hotel focus to real estate more broadly, but always having a foot in the hotel industry because I was passionate about it and I did enjoy it. So that's what kind of got me here today. So this is really in my current role, the culmination of many years of preparation, but also something that I've wanted to achieve, since I was at Cornell. So it's been a great experience for me.
Got it. And you spent, 15 years at Morgan Stanley?
Yeah, it was a little over 15 years, and working for Morgan Stanley gave me a life experience that I don't know how someone can replicate. I was 3 years in New York City. I spent 10 years in London. Being based in London, I had responsibility for the Europe, Middle East, and Africa, and was able to travel throughout Europe and the Middle East very extensively. And then I was asked to move to Asia and was based in Singapore with an office in Hong Kong, where I was responsible for the Asia real estate business. And again, while based in Singapore and Hong Kong, I had the opportunity to travel to every other Asian country to learn about the business there and meet the people there and understand the culture. And it was all really amazing experience. So I left Morgan Stanley at the end of 2012 to work for one of my Singaporean clients, which took me, believe it or not, back to the U.S. And I was running their U.S. business, which is, again, focused on real estate and hotels. And in that case, we acquired a property in downtown L.A., which is the U.S. Bank Tower, and did a major repositioning of that property. But no, I cherish my time at Morgan Stanley. I maintain very close relationships with the Morgan Stanley alumni, and we all get together every year and share war stories and catch up. So, yeah, that was an important part of my personal development.
So what's next for Braemar? I mean, are you do you have kind of ambitious plans to dramatically scale the business? How's the what does your go forward strategy look like?
Yeah, I'm always looking for ways to dramatically scale the business. The challenge to do that, and you've hit on precisely the right objective looking forward. The challenge to do that is how to do it accretively to existing shareholders. So what is more likely is the slow grind. It's how do we continue to slowly grow the business over time, following a consistent strategy, doing what we say we're going to do, delivering on the goals that we've established for ourselves. We've just achieved about a $500 million equity market capitalization. We have $1.6 billion in assets. $500 million is an important threshold in the public equity markets. The next important threshold is probably $1 billion. So I think in order to achieve the right level of liquidity for shareholders, we're very focused on that and figuring out how to do that. Part of that is going to come from achieving a better multiple on our current shares outstanding, which is really able to be achieved by delivering results. And as we look out just for 2019, we've got a number of significant projects that should significantly enhance our cash flow starting in this year, but also next year, including the Ritz-Carlton St. Thomas coming back online. But also we've got 2 assets that are currently deemed non-core that are being converted from a courtyard to an autograph this year. One's in Philadelphia and one's in San Francisco. We think that will increase RevPAR at those hotels, in the case of Philadelphia, by $25, in the case of San Francisco by $50, and that translates into pretty significant EBITDA growth. So as I think investors see those results starting to come through this year and next, that should result in a re-rating of our stock. And then, we'll see if it's possible to issue some equity accretively in order to acquire more properties and grow the portfolio. Right now we have 13 hotels. That provides a decent amount of diversification, I'd say. No hotel represents more than 12% of our EBITDA contribution. But that said, there's always additional diversification that we can achieve, and more importantly, greater volume of trading and float, which is important to equity investors. So that's what we're focused on this year. This year we'll probably be a little bit less active on the acquisitions front. We've acquired $250 million per year on average the last 2 years. This year, with our various asset management initiatives, our time will be occupied doing that. And then as we look into 2020, we'll have to see where we stand from an equity pricing perspective, and we'll see where the market stands. And have hotel prices gotten even more competitive? Have cap rates gone even lower, or is it a better buying opportunity maybe than it is now? And that remains to be seen. But that's how we'll be spending the next certainly 12 to 24 months.
Got it. Well, you've been very generous with your time. Have really enjoyed this conversation with you. So thank you, and wish you and the company the best of luck in the near term. Again, we're huge fans of the properties. I've visited several of them, so glad to see those properties are in good hands.
Yeah, well, thanks, RJ. I will say that we've got an incredible amount of snow at Park Hyatt Beaver Creek and the Ritz-Carlton Lake Tahoe. So I would encourage you to get out there at least one more time before the spring comes, because the skiing is just unbelievable. Yeah, no, we love it. We're it's always it's always a conversation, because my youngest daughter actually, my oldest daughter and I love it. We're huge fans. My youngest daughter gets a little bit of altitude sickness, but nonetheless, we're going to make it out there. Great. Well, please enjoy, and let me know when you go. Thanks, Richard. All right, thank you.